Before starting the video, click the subscribe button and turn on the notification bell. Welcome everyone. As it is our first lecture about cost accounting, so today we will discuss about the introduction to cost accounting and the elements involved in the production process and the manufacturing account as well. So let us take a look on all these. But firstly, we will discuss about the meaning of cost accounting. So, cost accounting is concerned with recording, classifying, and summarizing costs for determination of cost of product or services. So, the first function of cost accounting is to determine all the items involved in production process and to record them, classify them, and to summarize them and to record the product cost. Then the other function involves the planning, controlling, reducing such cost and furnishing information to the management for decision making. So the things come out that the cost accountant has to make the decision and has to furnish the decision to the management that how the product should be produced and at what cost it should be produced so that it make a reasonable profit to the company. So these are the functions of a cost accountant, and this is the main reason of doing the cost accounting. Now let us take a look on how the product is produced and what elements does a product needs to be produced. Now we have a chart which shows that elements are classified into three main categories, and that is material, labor, and other expenses. So the material is further divided into two parts. One is direct and the other one is indirect material, and labor is divided also in two parts. One is direct and the other one is indirect. Then the expenses are divided into two parts as well, direct and indirect. Now what does all these mean by material, labor, and expenses, and the further categories of these like direct and indirect? So let us take a look on all these as well. As we know that material means anything by which the product is produced, but what does it mean by direct and indirect? Now let us take a look, and this chart will make you clear all the things. Direct material. Suppose you're going to make a furniture in your company. So timber will be the direct material because the direct material means the items which are directly traceable in your product. And the other example, if you're going to make a shirt in your company and your company belongs to a textile industry, so the cotton in a shirt factory, that will be a direct material because you can trace it into the product. Then in a tire factory, rubber will be the direct material because it is traceable in the tires. Then indirect material. Indirect material involves all those items which are not directly traceable to your product but are necessary to produce the product. So gloves, cleaning supplies, helmets, and chairs, these are all the items which are necessary to produce a product but are not traceable in your item or in your goods. Labor. Labor means the workforce which is employed for production. So what does it mean by direct and indirect? Direct labor means the labor which was involved directly to the production process. From the start of the production till the end of the production, whosoever was involved in producing the product, that is called the direct labor. So let us take a look on the chart. So factory workers, engineers, quality control, machine operators, painters, raw material delivery people, these are all direct labor because they were involved somehow in the production process. Now the indirect labor. Accountant, salespeople, maintenance personnel, administrative assistants, marketing executives, janitors, these are all the people which were not involved in production process. That is why they are called indirect labor because they had no contribution in producing the product. As we have discussed before, that product involves three items: direct material, direct labor, and factory overhead. So what is factory overhead? These are all expenses other than direct labor and direct material. So what that expenses are: indirect material, indirect labor, and all other factory expenses which are related to any other job but to the factory. So the factory apportions the expenses over all the products, and that expenses are called factory overheads. Suppose the factory is paying the electricity bills, then the factory is paying the factory rent, or the machine is causing the depreciation. So all these expenses does not pertain directly to a product but are important to be recorded because all these things were used to manufacture the product. Therefore, this will be included in the cost of product. Hope you have got clear idea about what factory overhead is. Now let us take a look on the schedule of cost of goods manufactured, that how and what costs are involved in producing the product. As we have discussed before, that direct material, direct labor, and factory overheads are three elements which are involved in producing a product. So let us take a look. So here we have some beginning inventory which was left over in the last period, and which is opening inventory or opening material for this period. And then we'll add the material purchased this period, and then by deducting the ending material which is left over in this period and which is not consumed for production, we will get the material which is used for production. Then we will add it with the direct labor and we will get the prime cost as you have discussed before. Then manufacturing overheads. So all other expenses other than direct labor and direct material shall be added into the product cost, and then we will get the total manufacturing cost for this period. Then work in process. We have discussed that work in process means the process which is going on in the production, and in other words you can say that the product is in the machines and not yet produced as a final product. So the products, the raw material which was in the machines in last period and which was not finished, it will be added into the production of this period. Then we will deduct the ending work in process which is left over in the machines at the end of the production year. So we will get the cost of goods manufactured. And then, as this is a manufacturing concern, so in financial accounting, students learn that opening plus purchases minus ending is cost of goods sold. But here, as they are producing their own product, so opening will be added into the cost of goods manufactured because it is manufactured by the company itself. Then it will be deducted by ending finished goods, the goods which are not sold but left over at the end of the period. Then we will get cost of goods sold. So this was all. Hope you have understood about the schedule. If you have any question, so you can ask it into the comment section that is open for you. So that was all for today's lecture. If you have any query, you can put into the comment section and we will make its part 2 as well, where we will solve the questions. Till then, good luck.